Hello everybody, it's KimTrades here. Today I want to go through a video where I talk about how to spot a stock market bottom, because this is where the generational wealth is usually being made. Most people and most retail investors lose money during bigger crashes, while investors who have knowledge and obviously big capital moves in usually completely opposite direction. So therefore, I want to go over a scenario and show you exactly what to look out for. So when we go into S&P 500, this is 2020 during the COVID crash. And I myself were invested during these times. So I know the feelings. Usually you have the feelings that, oh shit, it could go down lower. What if it continues to go down? Should I sell now? You hear everybody's talking about it. Everybody's panicking. And here's where you actually capitalize on it. First of all, your emotions are not what you have to go after here. So usually you have big emotions, like I said, and you have total chaos in your head. You don't know what to actually do. From an investor myself, who have been investing for more than 10 years, I have taken a lot of notes and studied this a lot. So one actionable step that you can do is to, every time you have feelings such as, oh shit, is it too late to sell? Everybody's talking about selling. Write down your emotions. This is super important because you want this as a reference for the future in case it happens again. So you can go through and say, hi, what kind of feelings did I had last time a crash like this happened? Okay, and what happened after this crash and after I had these emotions? Was I right? Were I right? Did it continue falling or did we actually reverse? That is number one. So I recommend you all to do this. And by the way, this is not financial advice. This is simply me doing educational content. I always encourage you all to do your own research. So when everybody's talking about it, that's when everybody is wrong and you should do the complete opposite. Because after all, you know that 90% of retail investors lose money in the stock market. Not because they are stupid, not because they have less IQ, nothing like that. It's simply because they don't understand the psychology of investing. Psychology of investing is very, very difficult. It takes time to learn. I've read a tremendous amount of books, documentaries on this, and obviously studied my own behavior during market crashes like COVID. And a good rule of thumb is when we have a significant crash, 15, 20, 30% of the broader index like S&P 500, your first initial thought to sell is usually completely wrong because investors and institutions, banks, they do the complete opposite. That's number one. And then what to look out for. So how do you actually spot that a bottom is very close to be in? So we all look into news. News are extremely important, and there are certain news that will tell you and give you clues. So I have three examples here during the COVID crash. So after the first initial, after the beginning of this crash, or actually close to the bottom of this crash, we had CNBC, 12th of March, saying that historic market plunge. Traders describe a day that went from uncertainty to panic. Your interpretation of this, and when retail investors like ourselves see this, it's like we most likely think, oh, yes, we are in panic mode. Maybe it will go down further. Then, 18th of March, CNBC comes out with an article saying the story of on the street. People sell what they can sell, not what they want to sell. So now the whole media narrative is about selling, negativity, and very, in economic terms, bearish news. And this came out 18th of March, almost exactly, just a few days before the dip was at its very bottom. Then we have Business Insider on 7th of April, when we started to have a reversal, which weren't confirmed, of course. saying that one research firm thinks the coronavirus roiled stock market could fall another 20% this year. So they want to scare you. They want to tell you that, hey, you should be cautious. It could fall another 20%. This is usually how they trick retail investors like you. Because after all, retail investors usually becomes exit liquidity. So when you are selling and or feel like you're forced to sell because, oh my God, maybe it will go down another 20%, banks, institutions, and those who have the actual knowledge, that's where they buy. They buy your shares and then they're happy. And then you regret it later on because, oh my God, I sold at the very bottom and now it's going back again. And then you reinvest and maybe it would go down, of course. So in bear markets, in historical crashes, in future crashes, it's important for you to take notes and look out for these types of articles and news coming out. These are arguably the best indicators for the stock market bottom is in or very near. Because after all, again, retail investors, most of them lose money in the stock market. Not because they have less capital, not because they are less necessarily educated, although this is education in itself. It's because they don't know the psychology of the market. So look out for this type of news. When you hear the worst type of news ever after a big crash has started, that's a good sign for you to actually start repositioning yourself and maybe DCA, dollar cost averaging, and buy more shares for long term. So this is a very short video. This is arguably the easiest way to spot a stock market bottom. Obviously, a stock market bottom can be because of different reasons. The most recent one, the war in Iran. We don't know how this is gonna continue, but these type of news have been out as well during the Iran war. That's still ongoing, but I like the COVID example because it is the easiest and most accurate way of how this whole psychology works. Same goes for a bull market, when to take profit. When you see that traders, investors think that the stock market could rally another 20% or another 10-15%, that's a good time to start taking profits. So we are in that period of time right now. Of course, we have a lot of different things. We first had rate cuts, 3 rate cuts that we were expected this year, 2026, and then it went to rate hikes, and now we have an approach where we think that we will have a rate unchanged. So these are the type of things that are very important for the stock market and for you to really understand how this is working. So always key takeaways. Take notes of your feelings. It might sound silly, but this is how you're actually going to learn. Because after all, investing is not easy if you really are interested in it. You can simply buy the S&P 500, of course, and just hold for life. That's one way of doing it. But if you actually are more invested and you like how the stock market works, these are the type of things that you have to do to become a successful investor. So take notes, look out for these type of news. When we have a big crash, and the crash has already put the S&P 500 down 15-20%, look out for these type of bearish news that, hey, maybe it will go down even further, etc. Because these are clues. And history doesn't always repeat itself, but it tends to rhyme. So keep this in mind every time there is a broader market crash of the broader index, like the S&P 500, NASDAQ. And I think that you will be in a very good position for the next coming years after a crash. So guys, very short video. Take care and take notes.